My name is Rona G, and I will be your host for today's webinar titled Repurposing Land for Sustainable Energy, a conversation with Encore Renewable Energy. The Blueprint for Clean Energy webinar series invites leading practitioners and researchers in the field of clean energy to talk about the latest opportunities and developments in corporate, nonprofit, and public-private arenas. In this webinar, we will discuss Encore Renewable Energy's innovative approach to repurposing land for solar energy projects, having overseen more than 60 commercial projects from concept to commissioning. We look forward to hearing more about the organization's focus on high-impact projects during this hour. Joining us today is Blake Sturcke, Chief Operating Officer and Chief Financial Officer at Encore Renewable Energy. Blake will discuss how Encore first grew into an organization that targets innovative use of land for solar energy, and how the company's mission has led to the success of numerous community projects and Encore's B Corporation status as of 2016. He will also introduce us to some of the opportunities and challenges facing the solar PV field. Blake, it is a pleasure to have you join us today. We are so excited to hear your presentation and have received an incredible amount of registrations for this webinar, indicating that our listeners are interested in learning more about Encore's pathway forward. Thank you again for joining us. Before we begin, I would like to make two quick announcements. First, the Yale Center for Business and the Environment is proud to announce the launch of our new certificate program, Financing and Deploying Clean Energy. This year-long admissions-based online certificate program equips rising leaders with the tools they need to accelerate the transition to a clean economy. Learn more at cbay.yale.edu/certificate. And final announcement, and then we'll get started. We'd like to remind our listeners that we welcome any questions you have, and we'll direct them to our speaker towards the end of the talk. Please type your questions directly into the Q&A window throughout the presentation. And with that, I would like to turn the floor over to Blake.
Great, Rona. Thank you so much for that introduction, and thank you for reaching out and expressing interest in having Encore spend time today with you and your audience. It's our pleasure to do so. Thank you, and thank you for all the participants taking time to join today. With that being said, Rona, does it make sense for me to just jump directly into the set of slides that I had prepared for the discussion here today?
Yes, I think that would be great. Okay,
great. So I'm going to turn off my video for the time being. I'll come back at the conclusion of the slides, and I'll walk through these. Rona, please let me know if you have any issues seeing the slideshow.
So we can't see the slides yet. Would you mind possibly trying to reshare your screen?
Yes, let me do that. Okay, are you able to see?
There we go. Yes.
Okay, great. So I've prepared, not all that many slides for the discussion today. I think maybe 10 or 12 or so. I'll spend some time walking through them, but wanted to try to do so relatively quickly, really with the primary focus being to cover some of those things at a high level that Rona had identified in her comments. And then to leave the majority of the time on this webinar to discuss items that you, the audience, are most directly interested at present. So we'll leave plenty of time open for Q&A at the end of this discussion. The first few slides talk a little bit about who Encore is, and I think that helps to set the stage in terms of the types of opportunities and projects that we're most focused on, why we are focused on those types of opportunities, what we believe the opportunity relating to those projects is from a financial and economic as well as an environmental perspective. And it also, I think, hopefully helps to inform you as to how we how our perspective on where the industry is today, where it's come from, and perhaps where it's going, how that is shaped by where we sit within the PV landscape. So Encore was founded about 12 years ago or so. The company was initially named Encore Redevelopment. The company was founded, and our CEO...
Blake, I think your audio just cut off.
Can you hear me now? Rona?
Oh, yep, we're good.
You're good? Okay, great. So I'll just repeat that in case it did not come through. So Encore was founded in 2007 as Encore Redevelopment. The founder, who is currently our CEO, Chad Farrell, he's an environmental engineer by training, and he had spent his career prior to Encore in the field of remediation. The business was focused then on the redevelopment and repurposing of underutilized, environmentally challenged properties. And what the organization identified over the initial few years, particularly under the Obama administration and some of the efforts that it was taking to jumpstart the clean energy economy, was that clean energy projects were particularly attractive means of redeveloping the types of properties that I just identified. And so the company began to spend an increasing amount of time working on those types of projects, and found that those projects were working well, both from a mission and in a financial perspective. By roughly 2011 or 2012, the company was entirely focused on renewable energy. And shortly thereafter, the company chose to focus more narrowly, or in a more targeted way, onto the commercial and industrial community scale solar market. Part of that was specific to the state of Vermont, which is where the business was founded and continues to be headquartered, which makes wind development challenging. So where we are today is we're a clean energy, renewable energy services business focused on the Northeast. Vermont continues to be a high percentage of our business, although that's changing as we expand into neighboring markets. We're particularly focused on markets such as New Hampshire, Maine, Connecticut, New York, Pennsylvania, and others. All share certain attributes from a regulatory perspective, amongst other things. And the types of projects that we particularly like, although they don't represent all of our activities, do fit into that category with respect to properties that are really underutilized or challenged in one way or another. Landfills, brownfields, carports, and rooftops all fit into that category. We can talk a little bit about why we think those opportunities are so compelling and really important in a few moments. We've developed, as Rona mentioned, over 60 projects to date, and we're fortunate to be able to say that all of the projects we've commenced development activities on have ultimately become operating projects. So the company became a certified B Corp in 2016. For Encore, that step did not require a significant shift in terms of values. Rather, it helped to codify the values and helped us to identify processes and systems that would allow us to institute the values that we held in a more structured way. We operate and are very much committed to the principles that are central to B Labs, the entity that has created and certifies B Corps, which, you know, in a very simple way could be thought about operating businesses better. So better meaning not just for profit to shareholders and maximizing value for shareholders, but also taking into account stakeholder, you know, effectively stakeholder theory as well as environmental impact. Last year, we were thrilled to be ranked in the top 100 impact companies by a group of organizations that are focused on these matters. And from a scale perspective, last year we were also ranked in the top 25 solar developers. So in order to discuss that a little bit further, we think with respect to doing business better and what the legs of the stool are. Probably everyone on the call, or most everyone on the call, is probably familiar with the concept of managing a business for the triple bottom line. So, you know, we start with a focus on profits, and then we sort of move on to planet and people, not necessarily in that order, but absent a strong financial base and profitable business and a sustainable financial business, it's difficult, if not impossible, to achieve those other objectives. We've grown at a fairly healthy clip the last few years. Not necessarily always in an straight upward trajectory, and we can talk a little bit about the volatility that the solar industry has experienced in the past and why that's been the case, if that's of interest to folks. Along the way, then, we've been able to, really importantly to us, have a meaningful impact from a climate perspective. And this doesn't talk specifically about the impact on people, but you know, the positions that we've added, I think the impact on high quality jobs within the supply chain that we touch upon, and frankly, importantly, the entire industry does. So today, I think there are, you know, in excess of 250,000 solar jobs across the country. Average pay is quite good, and those are spread really, you know, on a distributed basis across the country, more concentrated in some areas than others, but, you know, very much in sort of, you know, it's really a non-political footprint from a job perspective, which is great. We went through recently a recertification process run by B Labs as it relates to our B Corp certification and status. That happens every 2 years. Our score increased, and then at the bottom of the slide, you can just see how that compares to, you know, sort of the types of companies that, you know, we aspire to, you know, operate. We aspire to operate in a similar manner as these companies do, and we certainly have, you know, a ways to go, but we feel as if we're sort of making pretty good headway at this point in time. So, in terms of the importance or the opportunity around development of clean energy projects, our focus tends to be today on solar, and as we look forward, that in fact is going to, you know, very quickly migrate to solar plus storage. But in any case, the impact is largely the same in terms of what the transformative effect of putting these projects onto contaminated properties, underutilized properties, environmental liabilities in many cases, and converting them through the development and the construction of these facilities into bright fields. So as you can see on the slide here, we've identified just sort of a couple of the typical characteristics of these sites when we begin, or other companies similar to Encore begin to work on them. They typically are a liability financially and from an environmental perspective to the communities that they sit in. They do not generate tax revenue. There tends to be oftentimes a social justice issue. And at the end of the project, not only obviously is this piece of property helping to generate clean energy, it has been transformed into a financial asset. It generates typically both lease revenue to the property owner, oftentimes that's a municipality, as well as property taxes, often at the municipal as well as at the state level. The sites are better maintained. Sometimes social justice issues can be addressed. And to the extent that a municipality or a public sector entity is also serving as the purchaser of the electricity, there's the opportunity, or the realization, I should say, of meaningful savings on their electricity costs. And really importantly, in addition to that, it's certainty around their electricity costs. As some of you likely know, PPAs, power purchase agreements, or net metering agreements, which represent the primary types of offtake agreements within the sector, have either not always, but the vast majority of the time, they will either have a fixed flat rate or a set escalator, and that compares to what's typical in the electricity market that a buyer of electricity might otherwise participate in or procure their electricity from, whereby there's a significant amount of volatility, and usually the longest duration that a buyer of electricity can sort of lock in their rate for is sort of in the 1 to 2 year time frame. That compares to sort of 20, 25, or 30 year certainty and visibility under solar and other clean energy power purchase agreements. We have, hopefully this works, just a quick video so as to allow folks to visualize what one of our recent projects looks like. This is a 5 megawatt project built on a closed landfill in Brattleboro, Vermont. Here's a project we just finished. That's obviously a carport. That was I'll come back to that in a minute in terms of what was interesting about that project. This is on a brownfield in Vermont. Another shot of the carport that we just completed. This is right on Lake Champlain in downtown Burlington. That's another look at that carport project. To the left of the carport is the Echo Science Museum. It's a not-for-profit based in Burlington. So before moving on to the next slide, maybe I'll just talk for a moment about a few of those projects that were identified. I think that there are some interesting items that can be touched upon for several of them. So the carport project, that is one that was just recently completed late last year. It's currently the largest carport project in the state of Vermont. We've not yet seen a lot of carports built in northern New England. We expect that that's going to change as we look forward, as costs have declined in that segment, fairly rapidly, similar to what we've seen across the entire industry over the last really 10, 15, or 20 years. In that instance, the Eco Science Museum and Research Center, which does a lot of work focused on environmental issues, water quality issues in Lake Champlain, served as not only the property owner, but the purchaser of the electricity. This property was a brownfield. It was a contaminated site. There was a significant amount of remediation work that needed to take place. So there was that aspect to the project. There were visual concerns by virtue of the fact that this is the way that Burlington sits topographically. This is down the hill from where the city heart is, so it's highly visible, the museum had a strong interest in not only realizing electricity savings, but also in ultimately owning the asset. You may have seen that in addition to the carport, they have solar panels on their rooftop, which they do own. Encore structured a fairly interesting, I think, financial arrangement whereby we and one of our partners financed and owned that project, and agreed to donate the project to the museum at a future point in time after a certain rate of return was realized, to help to sort of meet their objectives, meet the investors' objectives, although they did realize probably a sub-market rate of return, but we thought that made sense because of the overall impact and the contribution to sort of the community mission. The Brattleboro landfill, which was the larger project along the river that you may have seen, or it was at the beginning of the video, that project is interesting for several reasons. One is it sort of demonstrates how long it can take projects in this sector at times to come to fruition. I think that project took 4 or 5 years from concept to commissioning. Encore was not involved for that entire period of time. The project faced some early development challenges, and we ended up getting involved later in the process. The project ended up being frankly a home run for the waste district that owns the landfill. I think that lease revenue over the life of that project will be well into the millions of dollars, and the electricity savings in this instance. This was a form of, I guess what I'd call an institutional or municipal type community solar program. So Vermont has a remote net metering program. Under that, multiple purchasers of electricity can enter into an agreement to purchase a certain share of a system's electricity or net metering generation. In this instance, 23 different entities came together. We worked to create that buyer group, which was comprised by housing authorities, school districts, universities, the waste district, and towns, in a way whereby they achieved some of those things that I mentioned before in terms of electricity savings and price certainty. So that was a project that both of those projects, frankly, were ones that we were fortunate to be involved with, and really pleased with the results. So this the next few slides attempt to just provide a little bit of a perspective in terms of what the industry has seen and what's been driving activity over the last 10 years or so. Here you can see the yellow line, downward sloping, is PV solar panel prices. I'm sorry, that's an average installed system cost, not a panel price. You would see very much a similar trend. In fact, a steeper decline if we had panel prices there, because labor costs and installation costs have been declining, but not as rapidly as the technology, where the declines have been, absolutely astonishing. What you can see is, and then the bars then are capacity. So, the amount of installed capacity in the U.S. You can see that, somewhat obvious relationship between the two. So the tremendous declines in installed cost, driven by not only economies of scale here, but really global economies of scale in the industry, has helped to drive installed capacity in a very significant way. Importantly, as that's happened, then the corresponding electricity rates, PPA prices, that these projects are able to provide to buyers of electricity have come down, very significantly. And as many folks know, has widely been reported, in certain locations at scale, solar is today the cheapest form of electricity generation, cheaper than nuclear, coal, obviously, wind and natural gas. And the expectation is that trajectory will continue, which which is really encouraging. The other part of the story, in terms of, from our point of view, that has gone along with and helped to contribute to this growth, is capital availability and cost of capital. So this is a capital-intensive, project finance sector of the economy. And as a result, capital availability, capital costs of capital are direct drivers in terms of industry activity. You can see on the left-hand side, you see a couple things. Total capital available to the clean energy economy has grown dramatically, but solar is that, on the left-hand side, that small yellow sliver, becoming much more significant more recently. So increasing during that period of time from, on a global scale, $11 billion to over $160 billion. And not surprisingly, then, the cost of capital, which again goes to the ability of these projects to provide compelling economics to all participants, including the electricity purchasers and, frankly, the property owners, has declined tremendously. The reason why that's happened is that the asset class has demonstrated that it works. And so it's being valued today as a fixed income asset class, with unlevered rates of return on utility scale projects in the 5.5% to 6% area. Those numbers are higher as you look to finance smaller projects, whether it's in the commercial sector or the residential sector. But nonetheless, there's been a very rapid decline in terms of cost of capital, and that's played an important role in the industry's growth as well. I mentioned earlier jobs in the solar industry. What you can see here is that there has been, quite significant growth over time, but that over the last 2 years, we've seen successive years of job losses. That's entirely a function of policy decisions out of Washington, specifically the solar tariffs. And then the steel tariffs had a significant negative impact on the industry, unfortunately, last year in particular, but also the back half of 2017, because of the dramatic amount of uncertainty that created. I think a testament to robustness of the industry, however, is that that tariff, the Section 201 tariff that was instituted, was initially 30%, and within 6 months, post-tariff panels here in the U.S. were at prices at parity to the prices pre-panel. So you saw a 30% decline in that 6-month period. So the industry is back at a point, even though those tariffs remain in place, they will step down over time, whereby the economics work in a similar way, or are similarly as attractive as they were a few years ago. I should say one more thing on the solar job front. We do expect that upward trend, the longer term upward trend, will continue as we look forward 2019 and beyond that point in time. So the area to focus on here, from my point of view, because we've already looked at sort of installation growth over time, is where does the industry grow from here? You can see that we expect a significant amount of increase in 2019. 18 was depressed, as I mentioned, because of the tariff panels. 19 should see a significant amount of growth, and then we believe, and these are leading industry analysts. So you could question, certainly they're not always right, but the industry consensus, which also may not be right, but currently is that we're going to see significant growth over the next several years until we see the first step down of the federal ITC, or several of the step downs. The first step down actually takes place this year, but you're going to continue to see growth in 2020. And then there'll be a step down or two before it levelizes at 10%. Nonetheless, I guess really two important takeaways. One is, as you can see, over time, there have been large shifts from year to year in terms of volume and activity. A lot of that has been driven by policy, primarily out of DC, both on the tax front as well as on the tariffs, and that in aggregate there is a fairly bright future as we look forward in terms of where the industry goes from here. So that concludes the prepared remarks. I will stop sharing my screen, and then Rona, I'd be delighted if now's the right time to do so, to answer questions to the extent that I can.
First of all, thank you so much, Blake, for such a great presentation. This has been a topic that our listeners have been interested in for a long time, and we're glad to have you come and share your insights. We have some great questions coming in from our listeners through the Q&A window, but please keep them coming. We will definitely be, throwing them out there for Blake to help give us some answers to them. And if you're just joining us, we're speaking with Blake Sturcke from Encore Renewable Energy about Encore's innovative approach to solar photovoltaic projects. And so the first question that we have is, can you talk a little bit about how your company originates projects, and possibly, do you have competition with other developers, or are you usually the main choice for the different partners that you find? Oh, sorry, Blake, I think you're still on mute.
Apologies there. So with respect to the second part of the question, undoubtedly, we operate in a competitive market. Not always, but oftentimes are competing with other developers as it relates to project opportunities. That's always the case as it relates to governmental entities, which procure through RFPs. That's not always the case in other instances, but I think it's a good sign that it's a competitive market, because it speaks to the vibrancy of the industry. Although, of course, it requires, it makes it a challenging industry to operate in. But that's the case, oftentimes in healthy industries. In terms of how we go about originating projects, there are a number of different components to that. One of which, if you think about the different components to a project, you really have several key assets that are required before a project becomes viable. A lease is required, offtake is required, and then a set of permits. The ability to, in fact, build and operate the project those things are also required. Absent a property, that really that sort of is the foundational building block, and so we tend to start perhaps at a state level, identifying states that have strong regulatory frameworks and financial frameworks, costs of electricity, et cetera, that make projects financially viable, and then move on to identifying viable sites, oftentimes utilizing GIS types of tools and technologies. So as to help us to identify attractive, viable properties. There are a number of other screens then that those properties would run through, and sort of in parallel to that, we are also identifying different types of offtake arrangements in any given market, which varies state to state, and engaging with entities that we believe fit within those programs well, and are well suited to and would benefit meaningfully from the procurement and purchase of electricity from solar projects.
Thank you so much. Can you talk generally about how Encore finances its projects like the brownfield projects, and how they are owned, or when you bring in different investors? And I guess a tag along to that is, how do you assess credit risk?
Good question. So Encore finances projects both on balance sheet as well as alongside or through larger institutional infrastructure investors, and infrastructure investors that have a specific focus, or at least a carve out, or a portion of their focus is on distributed generation, specifically C&I assets. The projects are financed on a project finance basis, as I mentioned earlier. Each project will be held in its own SPV. Oftentimes, the projects will be financed in a portfolio, so as to create economies of scale and efficiencies with respect to transaction costs, which can be significant within this category of project finance. A lot of that is driven by the complexity of tax equity structures, which can drive or does drive pretty significant legal expenses. And in the instances where we work with institutions, either those institutions will end up becoming 100% owners of the assets, or in certain instances, Encore will be a minority investor alongside those institutions. the nature of those institutions, I guess, as perhaps might not be surprising, has changed pretty significantly over the last handful of years or two. It had been the case that sort of initially these projects were financed by impact investors, family offices, perhaps. Today, we're in an environment where probably the newest entrants are insurance companies, large insurance funds that are making direct investments. They look at these assets and view them as long-lived assets. They pair well with their long-lived liability profile, and their capital sort of return on capital requirements are low relative to other investors. But we do see hedge funds, private equity funds, infrastructure funds, groups like BlackRock, just to provide a bit of a perspective in terms of the scale of some of these institutions that are participating in a meaningful way, along with utilities and subsidiaries of utilities, tend to be the largest investors in the category.
Okay.
Did that answer the full question, Rona, or was there a second part?
I think that was a pretty, comprehensive answer. And, something that's interesting to us and our participants was when you brought up near the end of the presentation about how policies have changed and they've impacted both, labor, and also you mentioned again just now how there are a growing number of actors who are participating actively in this investment area now. And so one question that we'd like to follow up with is, has anyone developed a comprehensive set of best practices for state policy and for state support in this kind of development, in particular, since you work across so many different states in the Northeast?
Mm-hmm. Yeah, that's a great question. I don't know. I believe that the answer is no. And the reason why I say that is because we have opportunities from time to time to speak either on panels at conferences or directly with key stakeholders or regulators in markets outside of Vermont regarding our perspectives and experiences in Vermont in terms of what worked and what didn't work from a policy perspective. And so that leads me to believe that that, along with simply not seeing sort of this best practices handbook, if you will, that doesn't exist. I do know, however, in addition, that there have been collaborative efforts between state regulators from Massachusetts, for example, with Vermont and with others, which is great, frankly, to facilitate the growth in states that haven't yet really sort of advanced their policies as much. The regulatory frameworks are hugely important in terms of where these projects do and don't work. Setting aside, and really there, I don't mean sort of financial incentives. I mean entirely, the policies around how procurement or how offtake arrangements work. Is it virtual net metering, remote net metering, simply behind the meter, traditional net metering, community solar, is that allowed or not allowed? At what scale can these projects be done? All of those things, as well as what do utilities have to do or not have to do in terms of interconnect. All things being equal from a pricing perspective, in terms of electricity rates, et cetera, those factors, will determine whether a market is viable or not. So seeing different stakeholders reach out to try to learn from others that have done well and frankly made mistakes, the way that, these things tend to be, they're challenging, I think, for policymakers and for industry participants. And I think, along the way, we realized, this worked well and this didn't work well. And to the extent that, that helps accelerate New York's path or or Maine or elsewhere. That's great to see.
Great, thank you so much. So considering the difficulty of having the structural frameworks and guidance within the industry, we have a question wondering if there's a minimum scale for municipal projects, before Encore decides to take on a project, and if there are any projects, past or present, on contaminated lands adjacent to or marginally located at wetlands.
Yeah, so there's certainly sizes, that below which aren't a great fit for Encore. That doesn't mean that they don't work for other developers with different business models or don't work for the municipalities. So for Encore, in general, the projects that we're focused on are in excess of 700, approach 1 megawatt DC. We will, for certain reasons, work on smaller projects at times. So, for example, that carport was 200 kilowatts DC, but we thought that made sense. It was something that we were excited to be involved with. In terms of sizes that municipalities work for, municipalities in general, they can be much smaller than that. Typically, they'll do best if they put together a portfolio of, if they have a number of small rooftops, for example, if they aggregate a portfolio and do them all at once, they can secure pricing that sort of is more along the lines of what it might be for a several megawatt project, as opposed to the individual projects that maybe are 100 megawatts or 200 megawatts or something like that. So that tends to be a good strategy and something that, the industry, that has worked well inside the industry for municipalities. I think the other element of that question touched on wetlands. So wetlands are, it's a great question. Wetlands are very regularly, they're a key part of our environmental analysis very early on. In certain instances, wetland issues will prevent projects from being viable on a property. In other instances, those, they can be navigated, built around, or addressed in other ways. So it's a really important issue, that sort of how it ultimately impacts a project's viability, or the viability of a project on a site, is going to vary based on the specific piece of property.
Great, thank you. So you mentioned about the portfolio of projects, and so what are the typical hurdle rates that you've been using to determine project viability and attractiveness, and how do you present them to an investor's portfolio, perhaps?
So I believe then that what by hurdle, although if this doesn't answer the question, if the person wanted to sort of clarify and state that I missed it, but I think that that's referring probably to IRRs, target IRRs, and so it really does vary, and it varies by scale. So utility scale, commercial scale, and within commercial scale, is it a portfolio, and how big is that portfolio, or is it a single project? And then residential, it also varies based on credit quality. So a project or a portfolio of the same scale and project type, with a single A, double A credit, a municipal, institutional, or mush market credit, as compared to a non-investment grade or unrated commercial credit, the pricing, the hurdles, the IRRs, can be quite different. So it's hard. So as a result, it's very difficult, without getting into specifics, to say what the costs of capital are. I would say, a utility scale, this is not a market that we operate in, but I believe that unlevered rates of return on equity are maybe in the 5.5% to 6.5% area today. I would say that sort of C&I is probably, depending on size of project or portfolio and credit quality, anywhere between 7% and probably 10+%, maybe even a low double-digit numbers if it's a non-investment grade credit, which also happen to be harder to finance. Residential, I don't happen to know that offhand. That's not a market we operate in, and I'm just not sure currently where that market is.
Great, thank you. So we have a question about for your C&I customers and when you're negotiating a PPA, how do you assess and get comfortable with off-takers' credit risk?
Yeah, yep. So it would sort of be a relatively typical credit analysis, similar to what maybe a bank lender might run. So we would start by asking for historical audited financials. Ideally 3+ years. We would run a credit analysis. So just build out credit ratios and then assess what that credit looks like relative to sort of S&P and Moody's credit ratings. Sometimes a shadow rating, and some of those organizations offer shadow sort of rating tools. Those can be utilized as well. Oftentimes, not only does Encore or another developer conduct that type of analysis, but the permanent asset owners and probably the tax equity and lenders would do the same. Now that information could be shared, but ultimately it starts with a set of historical financials, so as to allow the asset owner to properly evaluate the company's financial and credit profile.
Great, thank you. And so, of interest to our audience is actually, who are some of the other developers in the U.S. that are focusing on brownfield sites, or maybe, are there any other ones so far who are looking to make this their business?
Yeah. There's certainly other developers that. Encore is a relatively small company, and there are huge numbers of brownfields and landfills that need to be developed. Hopefully, will be developed. Not nearly as many have been developed to date. But point simply being, there are other developers that are working in this space. I don't know of any. I'm sure that there are others who make it a focal point of their business model. I don't happen to know who those groups are. I would say that in addition to the impact element of these types of projects, we do like the market because it's exceptionally big. And so we think that there's going to be a significant amount of growth. It fits well with where regulators want to see and communities want to see this project. So all other things being equal, people would rather see a project on a brownfield or a landfill than on sort of virgin land, if you will. It's a differentiated market in that the projects are harder to build, and so we feel as if there's a degree to which we have somewhat of a competitive advantage. Yeah.
Great, thank you. So we're almost at time, and so this is our last question of the day.
Okay.
What do you anticipate the changes and general trends are going on in the field, and what are some of the challenges and opportunities that you see going forward?
Certainly one of the challenges through the remainder of this year for the industry is how to best manage the step down of the ITC, the federal ITC, from 30% to 26% that takes place at the end of the year. So there's safe harbor provisions that the IRS allows, and there's going to be a significant focus, I think, in the industry on how to utilize those, most effectively utilize them, so as to realize the benefit of that higher ITC value. I think it may be the case, although it's certainly not expected, but trade policy, to the extent that focused again on the solar industry, that would certainly be challenging. I think, on the other hand, in turn, that creates a real opportunity. I think the worst is behind the industry, knock on wood, from a trade policy perspective. And I think, frankly, from a federal government support perspective, the industry has really not received much support at the federal level. I should say that that's particularly true out of the White House. That, I think at this point, one of the really good things is that in Congress, this has really started to become a bipartisan issue, or area of bipartisan support. To the extent that continues, to the extent that coming out of the next election cycle, you are to see an administration, whether it be Republican, any administration, I guess Republican may be difficult to the extent Trump is the nominee. If there's an administration that has a more positive, supportive approach to the industry, that's a huge opportunity. I think there has been some discussion around an ITC extension, permanent federal 30% ITC extension. That would be very significant. There's also a current bill that's being discussed in Congress that would allow for an ITC on storage, standalone storage. That's a huge opportunity. Storage alone is a huge opportunity for the industry. We're seeing price declines there that are very much similar in terms of the trajectory to what we saw in solar over the last 10 to 15 years. And so we expect there's going to be a tremendous amount of growth in storage, which is a good thing for the industry. It's a good thing environmentally because it will allow for the grid to become it will allow for the penetration level, if you will, the percentage of total generation from renewables to continue to grow. I think without question, I guess, sort of summary conclusion, apologies for the long answer, is that I think that the opportunities, there'll definitely be challenges. I think that's the case with any market that's, somewhat regulatory driven, but I think unquestionably the opportunities far exceed the challenges as we look ahead.
All right. Well, I think we're out of time. This concludes today's talk, Repurposing Land for Sustainable Energy, a conversation with Encore Renewable Energy. Blake, thank you so much for joining us today. And we also want to thank the Blueprint audience for all of your questions. For those of you who are interested in learning more about Encore's work, please feel free to click into the link in the chat box and subscribe to Encore's newsletter. So to view a recording of this webinar, please visit the Events tab on the Yale Center for Business and the Environment website, or access the recording through CBAY's YouTube page. Thanks again for joining us, and until next time, this is Rona G. from the Yale Center for Business and the Environment.
Great. Thank you so much, everyone. Thank you, Rona.
Bye.